Well, we are back again. Episode, I don't know what, but it's in the title. We are talking about risk management today. Things are about to come full circle. We're about 2 episodes out from getting on Robinhood and actually making some money, and then it's all going to be lit. So let's get into it. While we may have an edge and a valid strategy to capitalize on that edge, the market is still chaotic, and we need to not only navigate that chaos, but feel confident while we're doing it. Risk management is crucial. Hitting it big once in trading can turn you into a gambler, and losing a lot in one trade can make you too nervous to ever take a risk in life again. If you never take a risk in life, you'll do nothing. So take risks, good risks, and be pragmatic. You need to develop your own system of risk management that aligns with your psychology. For all sakes and purposes, I will give you mine. I prefer to rank my trades in 2 categories. And this is what I do in my Discord too. Trades, I would literally give to my grandmother or do with her money. And then trades, I literally just call it everything else. I have an entry price. It's 10% of my portfolio for riskier trades, just initially. And for the ones that I give to my grandmother, it's anywhere from 20% to a full port. It just depends on what I have free, to be honest. If a trade meets my number 1 criteria, which doesn't happen too often, I will go as far as full porting it. I put this as bad advice, just because we all have different conscious levels, and I don't want to be the guy who told you to full port shit and then you blew your account. With every other trade, I am meticulous in size. I recommend finding a set amount you're willing to lose and then divide it in half. You retain 1/2 of that bit for dollar cost averaging or DCAing if need be. So here's a little example. If you're okay losing 2 contracts worth of money, you buy one initially, you watch it for a little bit, and then you deploy another one on a dip, or you may buy when it's on an upturn to try and get some more money. This keeps you hyper liquid, thus maxing your opportunity cost in the market. You might think you have an A+ trade and you put in 50% of your account, but then the fucking no-brainer S-tier trade pulls up and you only have 50% left in your account to do it. Nobody, including the greatest traders, are 100% winners. Losing is inevitable, but we should do it gracefully. That is what separates the winners from the losers. I found in my own records, my win percentage is just barely below 70 when I'm doing really good, and it's somewhere in the high 50s whenever I'm doing bad. And that's just because I take good trades. But I say that to say that I am like a 67% win rate guy. That is honestly what you kind of see across the board for good traders, but you could still win 70% of your trades and still not be profitable because you just took fat L's. So we need to have sell rules. Here are a few tips to lose well when it happens. I hate to talk about losing well, but you need to know how to exit. Be patient with your entry, always. This will protect you from an extra 5% to even 20% in drawdown. Drawdown is the percentage you go negative before closing a trade. Another thing you can do is scale out. So if you buy 4 contracts at various prices for an average cost of $500 per contract and your position goes down 8%, you can sell 2 of those contracts and take a smaller loss and also reduce exposure. You'll lose less money if it continues to go down. Robinhood, they do a thing called first in, first out. So your highest contract price will be the first one to sell. So what will happen is if you are scaling out on a trade that went down a little bit, you can DCA if it gets to a certain point in the dip that you feel good about, and then your average entry is a lot lower. And so fuck the $50 to $100 loss that you took really initially, because now you're setting yourself back up to get that 100 back in like a matter of seconds. Next one I have is cut losses. I have a rule that if a trade ever loses 20%, I sell immediately. A trade that goes down 20% will likely take longer than I'm comfortable with to cover. That is where opportunity cost comes in. You have to decide if you'll cut bait and move on, or let your money be frozen and hope to break even or even profit. There is occurrences where I have let it go down and it's because some weird black swan stuff has happened. I think I had AMD options and Trump said tariff and it went down, but my options were for fucking January 16th. So I'm like, DCA, you know what I mean? I don't give a fuck. I do give many fucks. I think a 20% drawdown gives you so much grace. I am all about volume and churn. I don't sit on options for 1000% gains. I'll do 15 smaller trades to get a 1000% total gain. Like with qubits, I didn't sit in an option for that huge gain that you saw on the chart, but I was just scalping the absolute shit out of it like an Indian, and I got to 858% on all my trades combined. So DCA, DGen maxing bonus tip. If you are very confident your trade will return or succeed and you have the cash, you can buy the absolute shit out of the dip and you will basically absorb your higher cost entry. When you do this, this means on the way back up, you put just a fat XP boost on it. I'm not talking double XP, triple XP, quadruple XP. This might be a quintuple XP boost. That is some DGen Chad shit. Note that this is how people blow up accounts, is revenge trading. Revenge trading is basically trading completely separated from your conscious and pragmaticness. Revenge trading is how people destroy not only their accounts, but their self-esteem. We talked about sell rules on the downside. We got the pessimistic shit out of the way. We also need sell rules on the upside. When I make trades, I have an objective price I am looking to get to. I am not just holding it and then trying to size up when the right time to sell is. All these trades that I've showed you, and I know it's just been on this document, all of these trades, I had a specific point that I was reaching to get to. There's some times where I'm like, okay, I'm gonna buy at 15 and I'm gonna sell at 18. But then it goes to like 16.75 and there's heavy resistance and it freezes up, volume goes down, or the volume goes really up and it still stays there. And I'm like, opportunity cost. I'm gonna sell, I'm gonna get out. Like I said, I'm about volume and churn. I like to move the money around, but I don't do like 8 trades a day or anything like that. I probably at max take like 10 trades in a week. Sometimes there's weeks where I've taken 0 trades because there's just nothing that I like. Patience is a virtue in everything. And now we are done with the document. Thank you for reading, or thank you for watching this. Please have fun with it. Life is short and money is not real. Hit me up if you have any questions. The next video is about psychology, and we are not even going to be on the document. We are going to be on some esoteric shit in the next video. After that, we will be on Robinhood to show you how this actually goes. It won't be one session. I don't trade daily contracts or anything that short term. I will edit the video in a way where you get everything that you need to see. Stick around, get this fucking money, bro. If money is out there, you just have to know how to position yourself. And the Bible says it too. Like, a lot about making money is planting seeds and fertile soil. That's how you take good risk, by betting on good companies, having a good edge, and having conviction in your trades, and being open to being wrong, okay? That's huge. If you're not open to being wrong, how are you ever gonna get better? But I wish you the best, and I will catch y'all in the next one. Jesus Christ is King. I love you guys, even though it's been very brief. I'll catch y'all in the next one. See you. See ya.